The market takes a dip. Is it just a little breather, or is there blood in the water? This is Invest with Jacob. Okay, guys, so in our last video, we talked about the fact that the market was above support, and as long as that was the case, we were looking at the targets above. They pushed higher on Wednesday before giving it all back Thursday and closing at support. So now the question is there blood in the water? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the CPI data, we shot higher and then pulled way back. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And if you've been watching my videos, you know that we've been talking extensively about key levels because they are the most important thing that matters. The targets are just what we look for next. The key levels are what change actual sentiment in the market. So the key level, the first one, the first major one, we've been talking about 56.30. They came down and tagged it exactly. They bounced off of it. And so far, they've been unable to break that first level. So what does that mean? Well, if you've been watching the videos, you know that means this is still a bull market, and we still look higher until that level breaks. Then we look to the next key level. Because two things can be true at once. We can be looking for the market to turn over and come down and break key levels and ultimately give us a much bigger pullback. But also we understand that until they break a key level, it's a bull market and we're looking higher. So this isn't an either or scenario, it's a both. We are looking higher until support breaks, and then we can start to change how we view the market. So if you're worried about the targets to the upside changing, it's simply that support moves up and the targets move up. And then when support breaks, we can start talking about downside targets. But until then, two things are true at once. The market is moving higher and it is a bull market. We are also looking for that bull market to turn over and give us a bigger pullback. So 56.30, the key level, they came down, tagged it exactly, and bounced off of it. So once again, Elliott gives us a pretty strong key level there. Now we're looking next at the 55.85 level. So if they can break 56.30, next would be 55.85, the support zone here. And then ultimately where we'd really start to change our opinion of the market is down at the 55.20 area. They held that area quite a few times down through here. You can see they came down and tested it over and over again. This is a very strong shelf of support. Through that is where we'll start to change our opinion of this top to where it could be a little bit more of a major top instead of just a short-term top where we can buy the dip and look for it to push higher again. So as it counts right now, we do have a pretty square 5 down here, which is what you would expect to see off of this high. So with that 5 down, we would expect a bounce. And if they do bounce it, we would look up towards 56.70 to 56.78 over that, and we start to look bullish again back to the top. So there's another key level for you. 56.70, 56.78, market starts to look like it wants to come back and take out this high and push to the next area, which would be the 57.25 area. So as we look at this market, we basically have two key levels to start with, the 56.30 area and the 56.78 area. If they break the downside, we look further to 55.85. If they break the upside, we look further to 57.25. These are the levels that matter and the levels that we watch, and then we watch the structure as well. So pretty good down move. They can still extend it. We can still see a 4-5 to the downside. And if they break 56.30, I do expect some acceleration here as it is a very strong support zone. You can see they tested it several times here, and they tested it twice yesterday. So if they do break, I would look for extension to the downside into the 5600 area at least, as we would be breaking major support, taking out stops, and creating a squeeze of the longs at that time. Again, to the upside, back over 56.78, and we look to 57.25. Over on the NASDAQ. Okay, so on the NASDAQ, we talked about this 20,500 area being the first level of support. The NASDAQ did blow through that. They came down to the next level we talked about and hit it exactly, which was the 20,360 level. They came down and bottomed there for now and gave us a small bounce here into the close and are hovering just above it for now. So that key level held support, so we're watching that. Again, they still need to break down below the 19,780 area, down here, 715 area. They break down below that, and then we can start to change our view of the market from a bullish market that still has more upside to it to a top being in and a much bigger correction coming. Again, the key levels are what we watch and what matter. and that is how we trade and understand the tone and sentiment of the market. So as of right now, we are sitting at that 20,370 area, 360 area. They need to push back down through that. If they do, they come into the 20,230 area. And then from there, we would look for them to test that 19,900 area and then 19,700. And again, below that area is where the market starts to change character and becomes more of a bearish tone in the market as opposed to a bull market. So key levels there, again, they got to break that 19,360 area and then ultimately down through 19,715 down here below this wave 4 low. That would be a strong sign that this top is a little more long lasting and we're looking for a much bigger correction. Back to the upside, the next two targets, if they are able to push back through the 20,855 area, would be 21,154 and 21,396 as your next two targets to the upside. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the web page. Once you're there, check out our membership plans area. We have two incredible monthly plans that both come with a 7-day free trial. This is because I want you to get in there and make sure you love it, become part of the trading team. Make sure it's for you, interact with PT and I, and make sure it's something you want to do before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out. We also have our educational material, our Elliott Wave for beginners, and our advanced Elliott Wave courses. In our advanced course, we're going over these complex patterns that you're seeing in the market right now, these advanced fibs, these diagonals, double and triple threes, flats, all of the stuff that makes this market very difficult to understand, where these advanced fib levels come in for these extensions that we see to the upside, where the key levels are to the downside, all of the stuff you want to understand about this complex market. As you can see on the screen, it is helping traders make money and understand the market, but it is an advanced course, and if it's too much for you right now, we do have our Elliott Wave for beginners course. This course is helping real traders make real money and finally understand this market in a way that makes sense. It can be so hard when good news like today, where we have low CPI, and the potential for a rate cut come in and the market goes down, and very confusing when bad news makes the market go up. This could be seen on the CPI data of October of 22 when we had the highest reading in 4 decades and the market ripped 2,100 points higher. It can be very confusing when those news cycles don't make sense, and that's because Elliott knew that the news was useless long ago. He knew that the key levels mattered and what happens when those key levels hold and what happens when they break. This gives you a huge advantage over the rest of the market. This course is 25 videos where I go through 3 sections. Your introduction, where we go over your mindset and emotion, your KISS method, why it works, and the expectations. Your chart setup and tools, where we go through every tool you need to use with Elliott Wave Theory, how to use it and why we use it. And the Elliott Wave for beginners area, where I go through each of the waves in depth, go through the corrective depth theory, go through the theory of alternation, the impulsive moves, the pivot, everything you need to know to make sense of an irrational market. Now, the really cool thing about both of these courses is if you want to get them at a discount, you can get our bundle plan and get them together for $37 off. Or if you want to get them for free, you can simply join our monthly rooms as they are included in both rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ and we swing in day trade, which means we trade quite often in my room. But if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that just kills the market, and his reduced risk binary method that gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades. It's so unique. Something you really have to see to understand. That's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. I can't stress the key levels enough. 5630 to the downside has to break. If it breaks, we should accelerate toward 5600 and ultimately 5585. And if that breaks, we should see acceleration into the 5520 area, which is a huge level for the bulls to hold. To the upside, if they can push it back over 5678, we would be looking to 5725 next. Over on the NASDAQ, they broke through one key level, and they are at the next one at that 20,360 area. If they're able to push down through that level, we would look for them to continue into the 20,200 area, and then the 19,009 area, ultimately looking to break the 19,715 zone, which would change the sentiment of the market. Otherwise, if they push it back to the upside, back through the 2763 to 2855 area, tells us that we're likely headed up to 21,154 to 21,396. Guys, it's the weekend. Grab yourself a drink, get out of the house, do something fun, enjoy the summer, and I will talk to you next week.